There's an active $1 million bet that Bitcoin will reach $1 million in the next 90 days. The entrepreneur and investor Balaji, known for his correct call of the coronavirus pandemic, publicly wagered $1 million that Bitcoin will reach $1 million in price in 90 days. Crazy, right? So let's look a bit deeper to understand why he made this bet. To understand how we got here, let's go back to the coronavirus pandemic, and specifically between March of 2020 and May of 2021. The US government, through its various programs, meaning to ease the financial hardship that was caused by the coronavirus pandemic, ended up flooding the economy with 4.7 trillion additional dollars. All this money, regardless of what it was used for, what it was intended for, ended up in banks. And since consumers were awash with this new stimulus money and businesses were uncertain about the future, there was a lot of fear regarding new strains of the virus and a lot of uncertainty regarding when businesses would be allowed to open again and what the look and feel of the economy would be post the pandemic. So a lot of businesses were scared out of borrowing money too. So basically banks had this pile of cash that couldn't lend out to consumers or businesses because there was no demand from them. And there was only one option left for the banks to store their cash, and that was in treasury bonds, basically debt that is backed by the government. And at the time, it was paying very low interest rates. But the banks, as we mentioned, had no choice. They might as well buy the US government bank bonds that were paying close to zero but above zero interest rates, as opposed to just storing the cash and basically doing nothing with it. Fast forward to 2022. Inflation is now clearly out of control. All of these additional dollars that entered the market end up devaluing the currency. And so the Fed has to raise interest rates in order to suck liquidity out of the market and bring inflation back down. The problem is, when interest rates rise, the price of bonds fall. If a bank has a $100 bond that is paying 1% and interest rates rise to 5%, the bank isn't going to be able to sell that bond for $100 anymore. It has to sell it for less than $100 in order for the buyer to get a 5% return out of it. Because otherwise, if the buyer is not getting a 5% return, they'll just go to the government and the government will give them a 5% return. So all these bonds that were bought when interest rates were close to zero are now worth a lot less now that interest rates have risen to 5%. This chart from the FDIC shows the dramatic extent to which banks have taken unprecedented losses on their holdings as interest rates started to rise towards the start of 2022. What makes this picture so dangerous is that these assets, these bonds, are what the banks were using as reserves. So if depositors come to the bank and say, hey, we want our money back, the bank has to sell these assets for a loss in order to give the depositors their money back. And if all depositors want their money back at the same time, there are many banks that will not be able to make their depositors whole again because of how much their reserves have devalued as interest rates have risen. In fact, a recent study from Columbia and Stanford universities found that 186 banks were at risk of bank runs, similar to what happened to Silicon Valley Bank. What's more is that depositors are incentivized to withdraw their money from banks in order to buy US Treasury bills that are now paying close to 5%, as opposed to keeping their money in banks where they're earning next to nothing. So banks are caught between their reserves losing value on the market and people wanting their money back. And all of this is happening at the same time. Now, as the stink of this problem started to grow more foul with the bankruptcies of Signature Bank and Silicon Valley Bank, the Fed stepped in and introduced the Bank Term Funding Program. This program is basically the Fed saying, hey, if you're a bank and you need money to return to your depositors, we're going to lend that money to you. Now, to fully appreciate the full size of this program, take a look at how much money the Fed is making available to banks through this program. And this is from the Federal Reserve's website, by the way. You can see how this amount exceeds what was made available during the height of Corona, and even that during the 08-09 global financial crisis, or GFC, for those who like acronyms that no one will really understand. In addition to increased lending to domestic banks, the Fed reported increased lending to other central banks and monetary authorities to the tune of $60 billion just a few days after it started this program, after this number was actually zero before this program started. Now, where does the Fed get all this money to lend out? From the same place that it gets all the rest of its money and all the money that we have in our fiat system. It gets it from thin air. It just prints it. Therefore, new money is entering the system once again. So let's recap here. The Fed printed too much money. Inflation rose. The Fed tried to turn the money printer off. Things started to break. And now the Fed was forced to turn the money printer back on. So what's going to happen next? Well, according to Balaji, Bitcoin to 1 million in the next 90 days. And why Bitcoin specifically? Bitcoin has a fixed supply that cannot be manipulated or altered, has a fixed maximum supply, I should say, at 21 million Bitcoin. And that cannot be corrupted, or at least it is designed not to be. And so the theory is that people are going to seek refuge from these fiat currencies that are being devalued all the time in order to maintain this debt-based system. People are going to seek refuge from that in Bitcoin, which cannot be manipulated or corrupted and has a hard limit on how many Bitcoins can ever be produced. And it's almost like the fiat system has been checkmated by Bitcoin, because whatever happens, basically, Bitcoin stands to benefit from it. If we accept the premise that the banking system as a whole is pretty much insolvent at this point, if more banks are allowed to fail, this would underscore the shortcomings of banks as basically safekeepers of people's money. On the other hand, if banks are backstopped by the central bank and they're bailed out with the introduction of new money into the system, then this is just going to debase the US currency and other currencies worldwide as they do the same thing, and people won't use the fiat currency to store their purchasing power over time anymore, and they'll opt for the alternative, which is Bitcoin. The issue here with this bet is with timing. No one really knows when this realization of the inadequacies of the banking system and fiat money is going to hit the common person. It's also hard to tell how much Bitcoin will benefit from this realization versus other stores of value like real estate, like stocks, like art, and other basically hard assets. So will Bitcoin reach $1 million? I think probably eventually it will. However, how long this takes and how much a dollar can actually buy when Bitcoin reaches $1 million is basically anyone's guess. What is clear to me is that there is a strong and reasonable bull case to be made for Bitcoin in this environment, and that's why I've been adding more of it to the PIF growth portfolio.